And the algorithm is designed and coded in a way where it will capitalize on two primary things. Where there are pending orders, and it does not know how many orders are above or below the marketplace. It doesn't know that. It cannot worry about that because that's always a dynamic fluctuating value. Just like you look at level 2 data. You'll see the orders there. There'll be a big block. There'll be a 500 block, a 300 block sitting at a price level. And then as we get closer and closer and closer, that order won't be there anymore. It'll be less. Why? They lose interest. They lose the interest as it's getting closer to it. Why is that occurring? Because it's spoofing. But see, you're looking at it differently. You're looking at it through the lens of retail. Like, it's going to go there because there's a big number there. That's bullshit. That's how you get tricked. That's how you fall victim to that nonsense. These things that are trying to point to where orders are, all you have to do is look at a 1 minute, a 5 minute, a 15 minute time frame, and you'll see every liquidity pool that these little bubbles or these little things are showing you. You don't need to know a number. The number is that's the red herring. That's the Judas swing gimmick of that thing, that process of visualizing how many orders are there. Those orders are not all literal. They're not actually going to be there when price trades to it. They'll pull them, but they're using big, large institutions can place orders there to influence other traders to book price for that express purposes of tricking them, knowing full well that every transaction that takes place leading up to that level that never gets hit, other traders are going to look at the chart and say, oh, this is one of those fanny pack patterns. And the last time I traded it, I got more money for my fanny pack. Come on, man. Like, if you give it enough time, you can come up with a gimmick or an excuse to get into anything. But you have to strip it down to the very bare essentials. The markets go up for buy stops. They go up to reprice and or rebalance an inefficiency. That's it. It goes down for sell stops. Or it goes down to reprice to or rebalance an inefficiency below market price. That is it. If your patterns that you trade off of happen to agree and overlap in that instance, that's why your shit worked. It wasn't because of your harmonic pattern. It wasn't because of Elliott wave. It wasn't because of anything except for that's what it was going to do at that time. If you go through all of your losing trades, I promise you it will be a revelation. But most of you don't even give a shit. You haven't journaled anything, so you don't have the ability to go back and study what you did wrong. But the ones that have, go back and look at where your losing trades occurred. And then look at what I teach, and you're going to see mine standing in front of your trade. What I tell you the market's going to do and how it's going to behave in book, that's why your trade failed. And vice versa. Look at all your retail shit, and the times that it works, it's because it's in agreement with what I'm teaching. And I know damn well that's narcissistic, isn't it? That's arrogant as shit. You're damn right, because it's the truth. That is the truth. And when you stop paying attention to all these gimmicks and you stop being these team mentality, VWAP team, volume profile team, VSA, supply and demand, they're all bullshit. None of that stuff makes price go up and down. Zero. You're not going to tell me the tick of the entry to get in at, which is the highest of the candlestick. You're not going to get out the lows. You're not going to trade like me. You're not going to get like that. You ain't going to get it like that. Not in any of that other Mickey Mouse shit. You're not going to. Because if any of you could have done it, you'd be doing it already. Why am I still out here barking and then nobody's coming forward and saying, here's the shit that beats your stuff? Shut the fuck up, Michael. It's still not happening. That's what's entertaining. Like, you would think, seriously, you would think. Come on. I want to fucking see it. But it ain't there. But they'll come in and they'll make little remarks to try to discourage you. Because they know they can't beat it. And they can't stand it in their own skin. Seeing that they can't beat it. They can't make an excuse for how I'm able to do it. So the easiest thing is, oh, you're a fraud. Oh, you're this and that. But how do you claim that? When I have transferred the information to students that now are using it too. And now, you said I would never live stream and trade. I'm doing it in front of you. With precision elements that you can't copy in anything else. So, market making is the mechanism that these algorithms book price under. There is no market maker person that's dealing between two price points that makes price. No, absolutely not. That is a dealer, but they have been miscalled as a market maker. They are not controlling price. They are not going to deliver the high and the low of the day before it happens. They're not going to give you the logic. And every single one of the people that used to be called market makers in the financial world that are now students of mine, they all collectively said the same thing. They had no idea what the fuck price was doing. They just were dealing at that price at that given time. So they were providing a pairing of orders coming together, and there it is. That's not market making. You're dealing. You're dealing in a price feed that everybody else is dealing with. You're not creating that feed. You're not changing it when it's going to keep going up to a buy-side liquidity. You're not changing its direction when it's going to go down to a sell-side delivery. You're not doing anything except for doing a transaction like anybody else is at that given time when we place a trade. So when you hear this stuff and you think, oh, well, the market maker does this. Well, the market maker's role is to be delta neutral. Yeah, dealer is. That's the dealer's job. That's not a market maker. A market maker is delivering the whole fucking range, the high and the low. And they are not going to let it go outside of that high and low unless it benefits them. And that's manual intervention. That's FOMC, it's non-farm payroll, it's CPI, it's PPI. When they go in and they know they want to disrupt as much as they can, because they're doing one of two things. They're breaking the initial sentiment going into that market release, some kind of news driver. The news itself is not causing that. That is the catalyst to blame when it's the market makers themselves that actually have their hand in the pot. They're stirring it up. That's what's going on. But when you keep hearing people talk about this stuff on TV, in books, in courses, and they repeat the same bullshit, it's the same bullshit. If you never look at it like I'm teaching you, you'll never see it. But once you start studying it this way, you'll see everything else is absolute grade A bullshit. There's no fucking reason how I could know this stuff in advance unless there was something that I knew that you don't know. Nobody gets this fucking lucky. Nobody gets this fucking close to perfect. Nobody can know the future like I'm fucking proving in live stream, in advanced commentary, one-sided commentary, very specific price levels. It's going to go to this liquidity next. Boom. Set your fucking watch. It's going to happen. Come on. And you guys are still, some of you sitting out on the sidelines, holding on to your bullshit little mechanisms, your little gimmicks, because you don't want to switch to Team ICT. Fuck Team ICT. There's no Team ICT. You're not on my fucking team. I'm a one-man fucking army. All of you just want to learn what I do, and that's all I'm asking you to do is investigate it, look at it, test it. If you don't like it, you can't do it, then do what you're doing now, or go do something else. But really put an effort into seeing it, testing it. The things I tell you to look for it. And once you start seeing it, you're going to be like, man, my stuff's saying this is a buy right now, but this guy said if this is going into the marketplace, it's probably going to go the other way. And now you're in a conundrum, aren't you? Do you stick with your program that maybe is 50% right? And now you have the wrestling match between what I've taught and you have an awareness of. If you take that next trade and you lose, you're a convert. I've convinced you at that moment. But the weak-minded ones will still want to wrestle, and then you'll troll me. That's what every one of my trolls that turned student, that was the same thing they did all the time. When they started implementing what it is I teach, and they were still trying to trade their shit, and when mine was saying it was going to do something that was opposed to them, they took the trade. And when they lost, they hated me more. They fucking hated me more. They're like, man, this motherfucker, and they would troll me harder until they kept seeing that when I was teaching the concepts that caused the market to go up really, and their pattern bullshit, their Elliott wave bullshit, their whatever the hell Mickey Mouse shit is, was failing up against it, they finally broke down and sent me emails. Said, listen, I gotta be honest with you, man. This is I didn't want to believe it in the beginning, but man, what the fuck, right? And now they're really good students. They don't blow smoke up my ass. They don't cheerlead me in public. They don't lift me up and glaze me all up on social media. I don't want none of you doing that. That's not what this is about. This is about teaching you what really goes on, how to anticipate it in price action, and remove all of the confusion about what it is you're looking for and when it's going to occur. Like how else could you improve upon this? Not that I'm not going to, because I am, but if you can time when you're going to do something, you know inside of a 20-minute interval when you're going to do something, and then you have a higher time frame directional bias that tells you it's most likely going to book here. Why? Because smart money holds positions longer than just a couple seconds or a couple minutes. But there are high frequency trading algorithms that fire in and out all day long that capitalize on that. It's not just institutions and retail traders. There is a entity that is always in the marketplace, always buying and selling all day long, up, down, up, down, up, down. In every consolidation, they're buying and selling in that too. There's always volume coming through the marketplace, always. And just like you hear these things called dark pools, well, there is an entity of smart money trading that they are not on the exchanges like you think they are. And it's something I can't point to it, and I can't talk more about it than what I just said there. Just know that this isn't the only circus in town. Let's say it that way, okay? And they have a vested interest in controlling the outcome. And that's pretty much all I'm going to say about it. But you can see these things happening every single day. If you're looking for it, you'll see it. If you've never been introduced to it, you'll never imagine it's like this. You'll think it's just random price action. Oh, well, my system didn't work today, so I'm glad I got a good stop management and didn't over leverage. Because, price is random. That's how they tell themselves. They tell them that because it consoles their doubts about what their next trade's going to be like. And the ones that are really good at money management, they don't care what the outcome of the next trade is, because they know as long as they're managing their money correctly, they could be 30% wrong. 30% right and 70% wrong in what they do and still be profitable. Much like a poker player. If you watch these professional poker players, count how many times, keep a running tab, get a little notepad. This is the things I used to do. I would write down their names, and then every time they had a winning hand, I'd put a check mark next to them until that table was finished, and they went to the next table. How many losing hands did they have versus their winning hands? And it's surprising. They only had very few winning hands, but they lost. Most hands are folded majority of the time. Study it and see. So what are they doing? They're managing their money. They don't have control over the cards. They don't have control of the other people's decision making. They have control over their money. When you're trading, you could flip a coin. If it's heads, you're going to buy. Tails, you're going to sell short. If it's a Monday, you're going to only buy the morning session. If it's a Tuesday, you're only going to buy the afternoon session. And you put these filters in. And you never risk more than 0.5%. At the end of the year, you could be profitable. Figure that out. You're holding for the daily range, by the way. That's the other part of it. It's the same mechanism that's being seen in poker. It's the same mechanism that's done in anything, that if you give yourself enough time for the circumstance to pan out, whereas in this case, the daily range, creating the higher high and closing on the high when you're bullish, or lower low and close on the low when you're bearish, if you put yourself in those days appropriately and just hold on to it, don't jam your stop loss up, try to strangle the trade, you are in a position to capture the lion's portion of the day. And you'll capitalize what that algorithm is going to do for that daily candlestick when it books the low and the high of the day. I'm telling you the times that it's going to create those instances. The low of the day is in the first 60 minutes for stock indices. The high is formed going into 2:50 to 4 p.m. all Eastern time, okay? New York local time. So if you're bullish, you can try to nail down the low, and you'll probably lose trying to do that, because you're going to try to capture the very low. And over time, you'll realize that, okay, what happens? Just wait for it to actually be there, and then trade it on the next discounted rate. What you'll be doing is you're going to be buying the low risk entry of the market maker buy model. Yeah, so let smart money have that smart money reversal. I'll be down there, but when you see that next fair value gap or institutional order flow entry drill or inversion fair value gap to trade off of, or order block, bullish one, that could be your entry mechanism for the low risk entry. and you ride it all the way back up to the initial high of the day, and then you anticipate an explosion where price goes up higher, because they're going to want to leave that Judas swing area as fast as they can. And a lot of ground will be made there, and people will chase it all in that big buy sign and balance, sell sign efficient that'll form then. And that's where the lunch macro will retrace back down inside that and stop those individuals out, and they'll accumulate more longs that they'll ride through the PM session of the day, and they'll get out at the high of the day forming between 2:50 and 4 p.m. Eastern Time. Folks, that is your real candle range theory. That's the real power of three. That's the real ICT. Okay, that's the algorithm. That's what the algorithm fucking does. That's what it's coded to do. Anything other than that, it's manually intervened. It's as simple as that. It's 4 to 6 times a month, both buy and sell. Don't take my word for it. Go through the fucking charts and you'll see it. So the reason why you lose, I'm going to say this in closing. The reason why you lose is because you're not aware of these things happening. You have no awareness that there is an algorithm that delivers price. You have no awareness that the market is going to do something that's predetermined and it's scripted. And you get tricked by speedy little price runs that take off, and that's exactly why they do it. They're engineered, they're scheduled, they're scripted to see you get enticed to chase something or change your mind about something you might be right about. That's why when you're bullish sometimes and the market has rallied up and it creates a buy sign and balance, sell sign efficiency, and then you see it drop down real fast and it gets real close to where you entered at. Because you don't know what the algorithm's doing, you get scared and you close it out thinking, I don't want to lose on the trade. I should have got out at the high before it retraced, but I got to get out of this because I think I'm wrong. It's going to stop me out. It's going to be one of those instances where it sees my stop and it's going to get me. And you contrast that with what I show you in my transactions. I'm recording it. I have a stop loss, and I am nowhere near afraid of where it's going to go. And it'll get real close to my stop, and I don't give a fuck. Sometimes I'm adding to my position right then and there. Think about that. Think about that. What's different about that? I know something that you don't know. And what I know, I'm teaching you. I don't put a price tag on it. I'm not selling it to you. I'm not enticing you to buy books because I'm telling you don't buy them. What's going to happen is this. I'm going to publish the book. People in third world nations are going to take the book and they're going to scan it into a PDF file. And in 3 days, it's going to be all over the internet. I'm not selling books to make money. I'm putting books in print just because I want the ISBN number associated to me. When I release all the information about the things I want to teach, everybody will go to that book, whether they get it from a pirated version off a fucking Telegram in a PDF format. I don't give a fuck about it. I'm not trying to make money on books. Nobody makes money by buying books, or selling books, rather. The margin's too low, and it's not. If I want to make money, I'll just simply fucking make money. Okay, I can go out there and press the button and make more money. If I want to have easy, fast money with no effort at all, I just put a mentorship out there. I'm not doing that either. So what am I doing? I'm teaching you because I like teaching. You think I can't make millions of dollars just putting another PayPal link up there? I can do that. At any minute, I can do that. I don't want to do that. That means I'm obligated to another group of people that think that they own me because they paid for some time. You don't own me. I like teaching. I like transforming individuals and giving them the empowerment to transform their entire future legacy and their family tree. And you can do these things. They can't hide it from you, folks. They can't. I'm trying to explain this to you. They cannot hide it from you. But if you don't understand it, you can be tricked by the things that you don't know. You get trapped in price. I don't fucking get trapped. There's no smart money traps. Smart money does the trapping. You're not trapping smart money traders. You don't even know what the fuck a smart money trader is. That's what you get when you get people teaching leaked content, lying and defrauding people. They make up bullshit like CRT. All this secondhand mentorship, watered down, has all come from me, and they don't even know how to do it right.